Art Collins here. Funny thing happened to me on the way to further noodling around with my so-called S&P Mega System. I found that it applied to the Bitcoin, but not quite in the way you think. Let's review the basic Mega System. Works in the day-only charts, 8:30 a.m. to 3:15 p.m. Central. All entries can be taken between 8:45 a.m. and noon. If the close is above the daily open, buy the next bar open minus the average 5 bar open to low on a limit. Okay? This would be a system that you'd need to be in TradeStation or some similar platform. Wouldn't be very easy to eyeball. If the close is below the daily open, sell short the next bar open plus the average 5 bar open, a high on a limit. Exit longs at the next open plus the average 5 bar open, a high limit. Exit shorts at the next open minus the average 5 bar open, a low limit. Set exit at 3:15 day session close. So, very simple. I call it a mega system because it's just designed to just churn and churn and churn automatically. You can see that all the buys are below the 5-minute bar openings, and all the sells are above them. And then you exit your longs higher than the open, or excuse me, yeah, that's right. I'm confusing myself. Higher than the open, you exit your shorts lower than the open. Okay? Something that I've said repeatedly is not a tradable system, but I keep trying to get the concept closer and closer to something that would be tradable. As it stands here, from the beginning of 2015 through May 17th, 2021, you had a zillion trades, $233,000 profit, average trade $16, blah, 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 blah. Okay? That's what I've showed you before. Now, what happens when you take the exact same system and apply it to the Bitcoin? Okay? By the Bitcoin, I mean this monstrously large contract, the full-size one at the Chicago Board of Trade, but all this information is irrelevant. As you can see here, it's not a system. Okay? But is the fix as simple as just turning the thing around? In other words, instead of buying on limit orders under the opens, what if you bought on the same average prices, high to open, open to lows, on stops, the reverse side? Just take a second to digest what's happening here. It would, you'd always be buying above the open at a distance of the average 5 bar opens to highs. And you'd be selling short at a distance of the average 5 bar open to lows on a stop. So stops on the Bitcoin idea, not limits. Okay. Again, I think we have something not tradable in the real world, but now that the Board of Trade has introduced micro contracts that are literally 1/50th the size of their full-size future, the future being 5 times the size of the cash market. Got all that? Well, anyway, you have now tradable increments. And you should just keep in mind that the concept is it works better if you're following pure momentum rather than looking for pullbacks. So whatever that's worth to you, happy to help. More great ideas from other trading experts, including a bonus chapter from Richard Dennis. Market Beaters, available again. Check me out here, and thanks for joining me.